Afternoon to everyone, and thank you for coming to today's program. Welcome to Golden Gate University in San Francisco for 123 years and counting. So it's our pleasure to be your host today. Today's program is going to be focused on small business, which is big business in the state of California. How many of you are small business owners or have some association with the small business ecosystem here in the Bay Area? United States Small Business Administration. Chris, would you like to say a few words about your organization?
Sure. Thank you for allowing me to be here, and I'm happy to be here. The United States Small Business Administration, we are charged with providing technical assistance, tools and resources, information, subject matter experts to support the small business ecosystem. We are here to drive economic vitality, community development, to start businesses, to grow and scale businesses, to create jobs, to provide assistance when folks are needing funding for that. And then we also provide disaster assistance. So whenever there is a natural disaster and our president declares it a natural disaster, SBA and FEMA goes into that community to provide resources, financial resources to help those to recover from that. My district office is literally right around the corner. I actually did a loop around the wrong block because I'm still getting familiar with San Francisco. But we cover from Santa Cruz County up the coast all the way to the Oregon border. It's the territory that we're responsible for. So we are happy to be here and to partner and be a contributor on this panel discussion today. So I look forward to it.
Hi, thank you for having me. The Golden Gate Restaurant Association is a nonprofit trade association that has been around since 1936, believe it or not. I've been involved with it for probably 15 years, the past 4 of it running it as an executive director. I also have 2 restaurants. I've been in the restaurant business a long time. So Rosa's Cafe is 26 years old and Terzo is 18 years old. And so it's been great to bring the operator perspective to work with policy. And 85% of our members, we're about 800 restaurant locations, which is not all the restaurants. It's about 25% of San Francisco restaurants and cafes. But about 85% of them are truly small businesses. They report less than 5 million in revenue a year. So we really feel the need for support for small business, and I'm happy to be here.
Jessica Wan. And Jessica is the director of the San Francisco Small Business Development Center. How many of you have heard of SBDCs? All right, a few. So they are a well-kept secret, but they are a great resource for small business. And Jessica, would you like to introduce yourself?
Thank you, Robert, for the opening remark. And hello, everyone. Honored to be here. I'm Jessica. I'm the director of San Francisco Small Business Development Center, SBDC. If you never heard about SBDC, it's a national program that provides one-on-one business support to small business. We are primarily funded by the SBA here, the federal funds, and in combination of state and local funds that make our services free to everyone, especially small business that are ready to start and grow. And then we have over 1,000 locations in the United States. Wherever you're going to start your business, you can find your local SBDC to help you. And I'm with San Francisco SBDC. The primary services we're providing is one-on-one business advising to small business. Just think of we are your extended member of your team. If you're not familiar with marketing, if you're not familiar with how to get a loan, how to connect to local resources, how to have your first hiring, and how to handle your accounting, and how to assess if your idea is really reasonable to put out in the market, we are here for you. We have a team of 23 advisors, and also we're providing free trainings online and in person. You can check our websites for more information.
Wow. So I would say, remember now, our members are food service providers. So bars with food, but not just bars, mobile food trucks and restaurants and cafes, largely small 1 to 3 units in the city. We did a member survey and it's a couple months aged, probably got it back end of April. And their largest concern, other than just trying to financially make ends meet, which we can come back to the cost side of things and inflation, was crime and safety, number one, in the city. Two was continued concerns and issues from what I'm going to call bad street behavior. And then the third was downtown recovery, believe it or not, before taxes. So that really surged up because many of our members are struggling, as Robert mentioned, due to the downtown and what we see and feel in terms of traffic. We need traffic to make our businesses pencil, unfortunately. Very sensitive to the top line. Thanks.
23 advisors, they probably give you an earful.
We hear stories every day and talk to clients every day on the challenges. And to be honest, storefront business have different struggles than online business, right? We all know that starting a business is easier than ever, but it's more complicated than ever. And by saying easier than ever is because you can easily just pull a permit here. And San Francisco has first year for free program. If you're not familiar with that, if you start a business in San Francisco storefront, they waive almost all the permits and license fees for you in the first year. So it costs little to register a business, to have a name out there in the market. But in order to successfully run a business, it takes a village. And then it gets more complicated after the pandemic because the advancement of technology, right? For small business owners, you don't really, you not just need to deal with products and services, you need to deal with a lot of things like local regulations, human resources, accountings from IRS, and then you have to deal with marketing with all those social media platforms. You just feel so overwhelmed. It's free, yes, but what's the best channel for you to reach to your target audience? So it becomes very complicated. I almost feel that as a business owner, you have to be like an MBA students that have like all the majors in accounting, finance, and like human resource to be a really good manager. So that being said, we want to be part of your team to be your success, just because our advisor has all the expertise for many, many years. We know it's hard to learn it by yourself. That's why we encourage everyone to work with an advisor because it's free. And why not use the expertise from the advisor to really understand how it takes to start and operate a business successful in San Francisco. We do have other centers, but I can only speak for San Francisco here. And we're facing, the small business here facing a lot of like competitions because the advancement of technology, not just from locally, from national, right? If you're selling a product online, yes, it's free platform maybe, but you're being charged by all the different like third parties, and then you have to compete with Amazons. You have to compete with like other products from international. So it's not easy, no matter online or storefront. I can tell like a storefront business, boba shop in downtown, it takes them $250,000 to open a storefront in San Francisco after the pandemic. A child care center in Mission, they're doing $500,000 renovation to turn that space to child care center. So it's very capital heavy to start a business in San Francisco.
And restaurants are more like 2 million, right? I mean,
It's a full service.
a full service restaurant, Terzo 18 years ago was 1.5 million, right? So you can imagine how much it costs to do a restaurant and things like that. So it just adds to that. Yeah.
To follow up on what you just said before I go to Chris, anything you're able to do with the city of San Francisco on the challenges around permitting, licensing, all these type things that take an inordinate amount of time?
Well, you mentioned it. I mean, there's the first year free program. We got Prop H passed a couple of years ago, which really helps streamlining the permitting. One of the things our organization does is spend hours with, and I do want to talk about the business tax reform because it's huge for small business and we want to get the awareness out on that, but work on things like that that can completely eliminate gross receipts tax if it passes on the ballot for businesses under 5 million of San Francisco revenue. So advocacy and things like that. So we provide that, less focused on the tools and the consulting, but more on helping make sure that we can get tax relief, we can look at other reforms, and we can help educate everybody, because it's super confusing. And I totally admit, I have an MBA, and thank God I have one. I mean, I think it's key for whatever business you want to go into, get your MBA. I can't say that enough.
Chris, you are the small business advocate for the United States, all the businesses in the United States. What type of things are you seeing and trends that are that at your level that are resonating both in the Bay Area but across the country for small businesses?
Sure. Yeah. You know, what I want to do, if you don't mind, I just want to kind of level set and set a presence for everyone here. So Jessica made a comment that the technical assistance that the SBDC provides is free. I would change that word from free because it's taxpayer dollars that Congress appropriates. So you've earned it, you've paid taxes, Congress appropriated, so it's not free because you've already paid taxes into the system. So let's be very clear about that, because I really need you to really understand that. My administrator, our president, they really stand by that. It's congressional funding that's appropriated based on your taxpayer dollars. So what I want you to walk away from with that is this. Listen, every 2 weeks, if you are a W-2 employee and you have taxes taken out of your paycheck, every year when you go see the tax accountant and you file your tax returns, those are payments that you're making to have your own consulting firm. And that consulting firm is an SBDC, it's a SCORE, it's a Women's Business Center, and it's a Veteran Business Outreach Center for those that have served this country or a spouse of someone that have served this country. So I just want that to resonate first and foremost. The other thing I want to go back to is when we talk about small business, we keep overlooking, and society, when I say we, society as a whole overlooks, there are two levels below a small business. There is a micro business and there is a mini micro business, okay? A mini micro business is one person, no employees, making no more than $50,000 a year. So think about yourself and people that you know that are small business owners, mom and pop owner operators, right? And then you have a micro business, one owner, maybe 1 or 2 employees. One of those employees is a family member, okay? And they're making no more than $100,000. So when we talk about small business, don't leave out the micro, mini, micro, mom and pop, because that 99.8%, it's really a lot of those when you look at those, okay? So I just wanted to put that in perspective. What I hear in my district, what I hear from Washington, D.C. about the small business community, it's awareness. People don't know where to go. People don't know what they don't know. They don't know who they can trust. Listen, I'm with the federal government. We are one of the most not trusted, you know, and I'm just keeping it real. Like, I hope you allow me to do that, because I'm going to be real and authentic and genuine. Many people don't trust the government. Think about those that are migrants, those that have migrated from foreign countries. They left because of their government. They left because of the opportunities that didn't persist there, that didn't exist there, right? So it's really raising awareness. And how we're doing it is like this, being here, being at events like this here, being with, you know, the SBDCs, being with the SCORE, because you got to remember, your taxpayer dollars has to benefit you. I can't market that. You got to realize Congress will not allow us to use your your taxpayer dollars to market. So we have to find community partners. We have to have resource partners. We have to have a restaurant association that's saying, the SBA, that guy, Chris, is crazy. He's over there. He wants to help you out. Reach out, reach out, reach out. Like literally, because if we don't have feet on the street, if you weren't in this room, how many of you would have learned about Jessica and the SBDC? How many of you would have heard the story that my taxpayer dollars pays for me to have a consulting firm? And you can have a consulting firm for every step of the business life cycle. You got ideation. I got an idea of a product or a service that I think I can monetize. You have folks that you can talk to help crystallize that idea. You then start a business. Those are different needs there. You're in a growth mode. Those are different needs there. You are a sustainable business, and those are different needs. How do I maintain a sustainable business? And then you start to get into that mindset that, hey, I've been doing this 30, 40, 50 years. I'm ready for the next. Let it be retirement, So what's your exit strategy? What's your succession plan? And so that's what I'm hearing around the country, are those sort of things. Is let's make certain that you know where you can go to get resources. You can come here to Golden Gate University, and Robert and the team can connect you with us, can connect you with Jessica, can connect you with, any of our economic development agencies. I mean, there's so many things there, but people just don't know where to go. So I think that's the biggest thing. And that's one of our administrators' top priorities is how do we deliver the products and the services of the United States Small Business Administration, both externally to you and internally amongst our team members.
Thank you, Chris. I wanted to pick up on a couple of things he said. One about free. So when you're working with an SBDC, and I used to be an SBDC director for the San Mateo County, it's free, but it's not free. And I say that just to say there's an expectation. You're going to create jobs. There's an expectation you're going to somehow have a positive impact on the economy. You're gonna get, if your business isn't started, you're gonna get your business started. So there's some milestones and things that an advisor will work with you on, so that it makes sense. It benefits you. You're a win, but there's a win for the government. There's a win for the community or economy that you're operating in. The second thing is around just education. Whether you're a micro business, a mini micro business, a bigger business, you've got to have some education to get that business started. So show of hands, how many of you have a written out, defined business plan, whether it's a one pager or it's a bigger business plan? So when you go to our program and whatever, that's one of the things, that's an entry price. That's a ticket. Do you have a business plan? Because that helps guide you along the way, and it moves you out of sort of being a hobby, thinking about it, into here's a business with real goals. The same exact principles apply. So think about those things as you're going and getting a business started. Question: anyone need money for their business? Access to capital. Always a topic. I'll start with Chris, and some of you think, well, the SBA, geez, I always hear about SBA loans. They must be the direct lender. They're providing all this money. But let me try to set this, that there's a lot of capital available with a business plan, with define some of the things that you have to have in order to get it. And Chris, if you could just go through and talk about some of the loan programs and capital programs that you have available.
Sure. Yeah, we have a multitude of programs and products that help folks get capital for a variety of different needs. And that word need is really important. A lot of times my education with small businesses when they're looking for capital is what is it that you need versus what do you want? You'll get a request for $500,000, and that's aspirational, right? If I had $500,000, then I could do this here. Well, the financial institutions are not investors, and we're not your business partners. We are a financial institution that's lending money, and there's an expectation, that's why it's called a promissory note, that you are going to pay this money back at a set interest rate, whatever that looks like. But one of the things that I wanted to make certain that we were very clear about is the structure of seeking SBA financing. Okay, so we are not a bank. We do not have a lender's law license. What we do is work with financial institutions that go through a vetting process, that get approved to offer a guarantee, a loan that they're going to lend. So there's two hurdles you have to clear. The first hurdle is with the financial institution and their underwriting criteria and their credit culture. Once they've approved it, there's something that they're not completely comfortable with, something about the cash flow, something about the collateral, something about the industry, the years of experience of the owners. They're uncomfortable with something. So then they come to the SBA and they need to meet the SBA guidelines for the SBA to issue a guarantee. In the event that you default on that loan or you have difficulties repaying that loan, then SBA is going to step in and do that. But if you want to know product specific, We have an express loan, which is a less paperwork, quicker loan, $50,000 or less, typically working capital that you need. We have a 504 loan that's for large acquisition of property, real estate, equipment, things like that. We have a 7A loan, which is our flagship. That's 7A. It's 7 applications, uses of proceeds that you can use that money for. And then you have our cap line. We just launched last week something called a working capital pilot program. So that's working capital as well that we have. And then there's something I want to point out. SBA is not the financial source for everyone. If you don't notice here, we are truly supposed to be the lender of last resort. You were supposed to have gone to other financial institutions and have been declined by other financial institutions. And then the lender, when they come to us, they have to give us evidence that you were not able to secure favorable financing at another institution before you come to SBA. How many in this room knew that? Yeah, well, you can't answer. These two over here. And I'm going to introduce these two in a second. You knew that?
I was a banker.
Oh, well, yeah. We are considered the lender of last resort. The federal government is to come in to bail out. But you want to understand that. Now, I tell you that because if you can't get an SBA loan, we have with us today Sanford Livingston. He's the president and CEO of NorCal Financial Development Corporation, and we have his loan analyst, Christopher Brew. They represent an organization as part of our state government. So part of the governor's iBank, which is the Infrastructure and Economic Development Bank. Again, it's not a bank. There's no deposit accounts. There's no check accounts or anything like that. But what they do is they have 7 financial development corporations. And I am very intimate with this program because I helped Sanford for a few years when I was with the SBDC. And what they do is they provide a guarantee similar to the federal guarantee, but it's a state guarantee from the state of California. They come in and they encourage financial institutions to say yes more often by offering an 80% guarantee on your loan. So if you're trying to borrow $100,000, they can come in and give a bank an 80% guarantee, 80,000 of 100. The bank's exposure to risk has just been mitigated and minimized to just 20%. Why wouldn't you do that? All banks have a loan loss reserve. They expect some losses, right? And so it can be up to a $5 million guarantee, and the maximum loan size can be up to $20 million. They just ask. Did you guys hear me say axe? That's my Southern accent that just came out. Yeah, when I get home to New Orleans, it gets really bad. But they ask that you not be in one of the restricted industries. So no check cashing businesses, no cannabis, which they're changing. They're getting some programming that's going to be able to address that. You're not in the adult entertainment industry, and no gambling. So gambling, adult entertainment, cannabis, and firearms is okay. Yeah. But anyway, there you go with financing. So the thing that my advice to you, if you're seeking financing, first and foremost, you can do a test yourself. For every dollar you want to borrow, check and see that you have evidence that you have historically, or you have projections that you're going to forecast that you can generate $1.25. So if you want to borrow $100,000, look at your financials and see that you have evidence of $125,000. The simplest thing before you even go, because if you don't go apply for $100,000 if you don't show 125. Look at 75, look at 50. Start off smaller, perform, come back and ask for more.
Jessica, how can SBDCs help in this access to capital?
Yeah, so Chris talked about the resources from the federal and the state, how they can help you to access to capital, meaning getting a loan here. So when we talk about getting funding for you to start and grow your business, it's not just loan, right? We can talk about grants. We have a lot of grants in San Francisco that are available to small businesses. And then we are talking about crowdfunding. You have to understand how it works. Of course, most people start with their own funding. It's self-funded, right? But everybody wants to have something from other people because you don't need to take on all the risk yourself. Even though the federal and the state take off a lot of the risk from the lender, but to be honest, not everyone is ready for a loan just because you have to show to the lender that even for the 10%, 20% risk they're taking on you, they have confidence in you. That's why for most cases, when our advisor work with clients, they want to make sure the clients are loan ready if you're looking for a loan. And I'm not going to tell you what's the 5C that the lender is looking for, because they actually look for the 5Cs from you. Some lenders are credit score driven, meaning that if you have a good credit score, they're willing to give you the loan, right? Because that's a history. Some lenders are projection based, meaning that if you have a good business plan, if you have a good industry experience, if you have passed whatever to show that you are capable of doing this business that you propose, they want to give you the loan. And then there are also other mission-driven lenders, CDFIs. They want to give you a loan because of who you are, because of your ethnicity background, because your income. They want to do that, but they tend to do a smaller amount of loan. So just want to make sure that you realize there are different type of lenders, and then they decide whether or not they will give you a loan. Even though SBA in the state wants to guarantee the 80%, 90%, they still want to make sure that you can pay back the remaining 10%, 20% yourself by judging if you're loan ready, if you're qualified for the loan. So I think the first question comes is that how much you need, right? Really, is a reasonable amount, and then work with the, in that way, you can work with a financial advisor to determine whether you're loan ready based on your current situation. And if you're not loan ready, what's your approach for you to get to that point to be loan ready, and which lender has your best chance to give you the money? This is our role at the SBDC.
Thank you.
Can I talk a little bit about restaurant stuff?
Sure can.
Okay, so I've done a bunch of deals and looked at a bunch of deals, and restaurants are different beasts. Usually we look for friends and family money or investor money. So you can, have a lot of money from a couple of larger investors, but usually it's more syndicated. So somebody's putting in 25,000, 50,000, something like that. And then you're doing a payback projection, over a certain time, and you're offering perks like tables when you want it, and maybe meal coverages and things like that. But oftentimes, and it's a different decision. I think what both of these folks are saying is super relevant, but if you're getting investors, you still need to do what Chris and Jessica are suggesting, which is really think about how do I make my projections and build in extra costs, particularly if you're building out a storefront or a restaurant. I've never seen it come in to cost on time, particularly in San Francisco. It's a plan, and I've done this a lot, right? So it's like always add 30% as a cushion for how much extra it's going to cost.
Getting better.
Yeah, at least. And so it's not, you take money from friends and family and you can't pay it back. You're going to feel bad. Obviously, you can't pay yourself back. You're going to feel bad. So think about that. But it is something very well used, and it's still used a lot in restaurants, is to have investors and then maybe look at a loan in addition to that. But I run into a lot of times where people don't understand you're paying the interest and the principal back, right? And you need to look at the type of entity you have and what that means in terms of tax effect and distributions. And again, I highly recommend getting an MBA. It's very helpful, but it's complicated. So I think what we're saying is there are many resources that I'm even hearing of, I'm not aware of, that are available to entrepreneurs and business owners. And even if you have a business working, that you really should take advantage of, and asking for help and leveraging this is, there's no shame in that. Ask for help as much as possible, because it is so hard to do this, particularly if you haven't done it before. So always think about equity financing as well. That's all I'm gonna say. Thanks.
I was gonna add, so my thought process as a financial advisor, as a business advisor, is to engage in a conversation to figure out what direction you're going to go in. Because we can sit up here and we can tell you all these different vehicles, crowdfunding, peer funding, projection-based financing, go to CDFIs, go to mission-based lenders, come to SBA, go to the state, Director Gray in the California Office of Small Business Advocate. You got Sanford over here. You got the Treasury giving the state $1.2 billion to support small businesses. You really want to have a meaningful conversation with someone that you can trust. That's going to say, should you pursue an investor? Should you have an angel investor? Should you look at venture capital and really understand that? Should you look at a loan? What you really want to figure that all out, because that's, for me, I am a huge proponent and I subscribe that every business, no matter how big or how small, you should have a game plan. You should have a business plan. You should be reviewing that business plan on a quarterly basis to see that you're on track to hit what that annual goal is that you set for yourself. But where the question you asked Jessica, what I want to add for Jessica is her advisors can sit with you and have that meaningful conversation, that in-depth conversation. And if they don't have the answer, there's someone in the network that does have that answer that you can have a real conversation about. Like Jessica said, is it even a viable business that I should be doing? That's a conversation. I love having that conversation, that I'm going to talk you out of becoming an entrepreneur, because you don't have, from what you've shared with me, you're not going to be able to weather the storms, the peaks and the valleys. And so if you don't have that, it's okay. Maybe be a partner with someone and do it that way. There's so many different ways to go about it, is all I want to say.
Thank you. Before we go into some Q&A, I just wanted to add on a couple of things. One, a lot of you may think of banks and bankers and think, well, bankers are always there saying no. No, no, no. But banks get paid, bankers get paid, and I used to run banking teams. I used to say, well, how many yeses do you have? How many times have you said yes? Because if you don't get a yes, they don't get paid. So they want to say yes. Now, what does that mean for you? Important word in banking is relationship. Not transaction, but relationship. Banks want to form a relationship with you. So before you ever even need any money, go by and introduce yourself to your local banker. Hey, I'm thinking about opening up a business here. I'm thinking about doing this. Or I just opened up my business. Just wanted to introduce myself and hey, here's some of my plans, etc. Probably, remember, they want to say yes. So they'll start a conversation with you. And they'll watch your business start to grow and whatever. And after a while, you will find they'll start knocking on your door. How things going? Do you have a need for something? Do you have a need for not only lending services, but cash management services, other things in that relationship? So keep that in mind to form those relationships proactively. The other thing is what Chris said. Don't get enamored with venture capital, with angel investing as your sources of finance. If you're talking to a venture capitalist and you got a $10 million business, you got a good sized business, venture capitalist is looking and saying, are you prepared to do everything to take that $10 million business to a $100 million business? Because that's the type of return they're looking for. And if that's not you, don't talk to them, because they're going to take a significant control in your business. Most people get their businesses started by the 3 F's: friends, family, and fools. Someone fool enough to invest in your business because they like your space, you're your mama's favorite kid, etc. So that's a big source of getting money for your business. You may go into your pocket and use your credit card. You really want to think about that. Really want to talk to someone before you do that. Some people can go in and they may say, I'm gonna use my retirement. I'm gonna use my 401k. You really want to talk about that one and talk to someone, get some advice. There are ways to get your business started over and above banking, because banks are cash flow lenders. If I gave you $1 and you came back to me next week and said, Robert, you know what? I just had a great quarter. Look at my profits on my P&L. I'm looking pretty good. And I said, you know, I'm looking for that loan to be paid back. Well, I had a great profits on the piece of paper. I'm looking for cash. So when you hear someone say cash flow lender, they're looking, do you have the cash to pay me back? So that's why that's a concept in banking.
I just wanted to add what Robert was saying about relationship banking. It's totally funny that you said that. So yesterday I was on the phone with DC and I was on the phone with the Office of Capital Access, right? And one of the things they were talking about, because like I said, we rolled out this working capital pilot program last week, and that's what they were talking about. Like they were getting feedback from some of the large financial institutions that imagine this. Imagine if you went into a bank for 6 months before you launched your business. Once a month, and you sat down with a banker. And every month you told that banker what you were thinking about doing or what you were doing, the actions you were taking. And in 6 months, you came back to open up your business bank account. Bankers are saying, the Bankers Association are saying, that would be someone that I would be vested in and investing in because I got a chance to know them at the beginning. So when you talk about relationship banking, that is huge. If you can establish a relationship with a financial institution that I'm just thinking about it or I'm going to be doing it, I'm going to do it in a year from now. They know everything, the ins and outs. They know, the nuts and bolts before you actually even launched and transacted your first transaction of business. So that was funny that you said that because they were talking about that yesterday.
Sanford.
Because you said, and by the way, I'm Sanford Livingston, good friend over there, brother over here, know them both. Love you, ladies. Here's the thing, when Robert said, oh, I did so well for the quarter, and you said, that's all fine and good, man. But the payment for this month for the loan. And you said, well, damn, how did I do really great that quarter, but I can't pay Robert? And here's where some of the stuff that I come in with Chris. Because guess what? Some of you may have contracts, let's say very easily with the state or with the government, right? And you got a contract. And it's $100,000 contract. How long does it take them to pay you? Right? Months, 3 months sometime, right? He want his money. He don't give a damn about no contract. So what will happen is you will need a line of credit, just so to let you know. And if you can, numerically analyze that and say, I need a certain percentage of money to pay back that payment because I got a contract coming. Those are the things you talk about. And you said, I love SBDC. So I actually work with every deal that we do at NorCal. We actually bring the forms available so that we automatically tie in to SBDC immediately so you can have access to them right away. So what you do is you bring your team when you say come to the bank and start a relationship. Don't go by yourself. Take your team. And maybe sometimes your team may go in and talk to the banker so that they never have to say no to you. They'll say no to the team member because you got things to do. And then when they're ready to speak to you, you'll always be on a considerable platform to say yes. I just want you to see what that difference was between I did really great, but I can't pay because you got contracts outstanding and you need a line of credit to pay your people to do the work until the contract is solidified and paid.
Thank you, Sanford. Let's open it up to Q&A, and we'll spend the next several minutes on that, and then we'll do a quick wrap up. Who's got questions? Off the mic.
Thank you guys for being here today. I've learned a lot so far. I guess my only experience with interest rates has been like credit cards, financing a car, things like that. So I kind of know what they're looking for there. Two questions, I guess. What's the lowest interest rate you've seen for a micro business, let's say? And what are you guys looking for, or bankers in general, to get to that lower rate?
I can't have you all.
Yeah. Okay.
I can share because you can't beat me. You can't beat me. Yes. Beat my answer. Okay. I feel faster, a lot more faster than you. 0% interest rate. I think it's right after COVID, offered by a CDFI up to, I forgot, it's 50,000 or 100,000 for businesses, including startups. And currently, there's a lender offer 2.99% introduction line of credit rate and small business loan for small businesses. I think across the board, I've been seeing anywhere between 4 to 12 currently for small business from different lenders.
I'm not sure what lender she's seeing. What I'm, what we're seeing, I just had someone that was going with a conventional financing, and the bank was, and I think it was Bank of America, they were offering him like 6.25% interest rate. It was 6.25%. It was a 25-year term loan. It was due in 15 years. So he has a big balloon payment in 15 years. And then he had a prepayment penalty, and it was 531. So if he refinanced in 5 years, there was a certain dollar amount penalty that he would pay if it was within 3 years, if it was within 1 year. So there's a lot of moving pieces when you look at that. But here's what you should, industry standard right now across the board. If you can find these, it's Jewish free capital that she's talking about. I saw that when they were doing 0% financing, but the criteria to get that was very stringent. So the average person that's looking for that, you're not going to get that 0% financing. Industry average, start with the prime interest rate. We're still at 8.5 right now, right? Prime interest rate is where you want to start, plus, and it's called risk-based pricing. So it's prime plus. It can be prime plus a quarter, prime plus a half a point, prime plus 1 point, and it's all based on your level of risk. So that's what industry standard. You can find some outliers out there, but that's what you should be prepared for. And if you hear someone say, 7, 6s all day, ask questions. How can I get to a 7 or a 6% interest rate when the prime interest rate is at 8.5? You need to ask questions. True. So what Sanford's talking about are fintech lenders. Those are the financial technology lenders that are all online based. And so you never meet with anyone, you never see anyone face to face. Everything is done online, and they got the fine print. Many folks don't read all of the documents that they get. And so the fine print talks about, after a certain period of time, how the interest rate, and you're talking 30, 40, 50% interest rates out there. It's crazy. It's crazy. So you got to really, and again, listen, I keep pointing to Jessica because she's here, but I have 4 resource partners that you can go to: SBDC, SCORE, Women Business Centers, VBOT. You can go to somewhere like NorCal FDC. They're based out of Oakland, but they cover the entire state. And he's being modest. They do about 60 to 70% of the entire state guaranteed right there. They know what they're doing. Now, we got a chance to work over the years, and we implemented some stuff that we did that was just standard with any deal that came in. But what we did was we took a proactive approach. We wanted to make certain that not only did we help you up front with SBDC to get ready, but then we helped you get the funds. But then we put in a default collaborative to make certain that you were able to perform while you had the money. And we checked in on a semi-annual basis to make certain that you were thriving and doing well.
I just
Juliana,
want to, sorry. I just want to add to the fintech you just mentioned. I want people to be really careful about going to fintech. Yes, it's quick and easy that you can get approved for a loan, but read the fine print. Some legit fintech can charge up to 40 to 50% interest rate in the fine print, but they're legit. They are legit.
Yeah, and what's just so you know, behind the scenes, what fintechs are doing, it's called merchant cash advances. So basically what they're doing is they're taking a look at 6 months of your bank statements. They're looking at your average balance, ledger balance for over those 6 months, and then they will lend you 10 to 15% of whatever that average balance is over 6 months. That's where they start. That's why it's called merchant cash advance.
This is a few years ago, but I was working with a fintech when I was at SBDC. The interest rate after we went through it with the client, 80%. It was 80%. There was no way they ever were going to pay that back. And they just hadn't read the fine print. They got the money, but they didn't understand what was involved with it. Yes.
So this is maybe separate if you have, and this is something similar to this that we saw in the restaurant world in the past couple of years. But there are companies out there that are saying, hey, if you have a restaurant or a cafe, we're gonna buy a bunch of gift certificates from you. And those gift certificates, then you're gonna, you're gonna pay us X for that, and then you're gonna get paid back. It's essentially factoring. It's the same thing, a small business advance. And those numbers really add up too. And it's not free. I have friends that took advantage of this a couple years ago, and now they're on the hook for paying the cash back at whatever those rates were, because they didn't have the sales to cover those gift certificate sales. So when it sounds like too good to be true, you gotta like step back and look at it, because these are very smart people that took advantage of this, that got just burned and had to pay it back. So.
Before we go to the next question, the other thing I just want you to think about is, yes, interest rates is certainly a factor. You want to try to get a good interest rate. It's representative of the market. But, think about, it factors into what can I afford to pay? Does this make sense for me? There's other things that go into you getting a loan. It's not just the interest rate. There's other factors that you really should consider as you're getting ready to do that financing. FICO score. All right, so the banks have some very defined, if you're between here and here, it's that rate. If you're between here and here, it's that rate. If you're there, it's there. So other things like that. And you can just know those things as rules of thumb. And there's a lot of people that can help you understand that. Andrea.
First of all, thank you so much for being here. This is all like really great information, great knowledge. So the question that I have, based on your experiences helping people, helping small businesses, what are some of the common qualities that you've seen from successful businesses that manage to thrive through adversities?
I think it goes to, certainly in the food industry, if you, again, it goes back to doing a research, what are you selling? Are you in the right place? Is there a demand? How are you going to get customers? And then how do you pay for everything, right? And so it goes back to an old-fashioned business plan. And I know so many people that are super creative. Chefs are super creative. And if I'm a numbers person, I'm not a cook, right? I'm not a chef. I never have been. So partner with somebody that brings the other side of that. Don't fool yourself. Don't say, I'm a numbers person and now I can cook. I barely cook for my husband. He knows that, right? So partner with somebody who knows it. And I think people that realize their limitations and their strengths, and then ask for help. Because like I say, there's so many resources out there, and I can't believe we don't market what you guys offer. I think that would be a great idea. We should have a chat with your director, because there's so many resources out there. But again, realize your strengths, realize your weaknesses, and then weaknesses. And then the other thing too is, don't be optimistic about how financially it's going to work. I hate to say that, but I, again, had a very creative, awesome chef partner, and his projections were always 20 to 25% better than reality. And that would get us in trouble over and over again. So that's my experience, 30 years in the restaurant business. So there you go.
Yeah, for me, I feel like for people that is pretty much is their personality that I see in people who succeed as entrepreneurs. Because there are some people who come to entrepreneurship because they don't want to work for anyone, but they didn't realize that they're not even, they are not a good fit for entrepreneur either. So for me, I feel like for those who are successful, they're quick decision maker. They're bold. Especially during COVID, I see a lot of business owners just doing business as usual, thinking that things can turn around overnight or next week. They just keep on waiting. Nothing happened. Those business die, right? Mm-hmm. For those people who are quick decision makers, say, hey, I'm not going to wait here and die, and I'm going to pivot my business. I'm going to do this X, Y, Z to survive. Those are the people who stay. And then always keep an open mind for learning. That's the key. Because as I mentioned before, it's a lot of complexity and also uncertainty when you run a business. So have an open mind to learn new things. even though it's like something that you're not comfortable with, because I don't think a lot of people here are comfortable with math, right? We don't like math. I honestly hate math, but I still need to learn math because I'm in this position. And I don't like technology, but right now I'm using AI. So a lot of things that are readily available for you to learn. You just need to have an open mind to learn all those new things, new tools, to see how it can help you advance your business, to better your efficiency and help you to manage your team. I think those are the things I see from successful entrepreneurs.
I would just add on, you just end it with the word I would start with. It's a team. You can't know everything. You can't do everything. So she's talking about a restaurant. Well, I'm making the best hamburger in the Bay Area. It's fantastic. And I would say, the first month I did 50, but now I'm up to 150 hamburgers. I'm going gangbusters. Why am I losing money? Well, so now you go and you check. Well, there was supposed to be one tomato slice at 1/8 of an inch. There was supposed to be one piece of lettuce, and each hamburger was supposed to be 1/4 pound. And then you go in and check, and oh, well, the chef wasn't quite keeping track and whatever, and now we got 1/3 pound in one hamburger. And oh, we got a 1/4 slice of tomato, and we got this, etc. And so all of a sudden you're losing money because you weren't keeping track of those things. Those things are really, really important. So team is really important. Perseverance and grit. Because you're going to have to persevere. You're going to have some good times. You're going to have some down times. You have to have a long arm. Now I got pretty long arms and I can reach around. And you see, I can pat myself on the back. Because you're going to need that sometimes. There's no one else patting you on the back. There's no one else sometimes giving you encouragement. You need that to get through. And the last thing I would say is be prepared to work harder than you've ever worked in your life. When you work for someone else, hey, it's 8 to whatever, you go home. And largely you can say, I can go home and have my life after I'm home. But when you're an entrepreneur, small business owner, it's 24/7. You're the one staying in the office at 12 o'clock at night, maybe doing the books or thinking about the next day or whatever else. If you're not prepared to do that, don't do it because you may not be successful. Let's wrap up. We got a couple of minutes here. Any closing words?
I was going to add 2 things to your question about what has been a common attribute for those that have been successful. Work ethic. You got to have a work ethic as an entrepreneur. Got to have that. If you don't have that, this is not for you. And then the other one is you got to be willing to pivot. When you see that you're not getting the results that you want to get, you need to be comfortable being uncomfortable and making some decisions that I need to not do this, or I need to change this, or I need to do something different. Those are the only 2 things that I can add to what everyone else has already said. But for me, like I said, the biggest thing for me is just walk away knowing that you're paying taxes on an annual basis. Your taxpayer dollars afford you to have access to the resources of the SBA to support you throughout the entire business life cycle. So SBA.gov. You can look up San Francisco District Office. I got business cards. You can call Jessica. You can call Robert. You can call Sanford. We're not hiding. So just reach out to us however we can support you.
I just want to do a shout out too that many of us, me included, would not be still in business post-pandemic without the incredible, and not to diss San Francisco because we didn't have as much money, we did what we could, but the incredible federal and state relief, but federal relief between the PPP loans, which were a bitch to get. I had to deal with some fintech stuff, but finally got them, between the employee retention tax credits, which some people still aren't paid back for, unfortunately, but were critical for cash flow in 2021. And PPP1, PPP2, the ERTC credits. And then the EIDL loans that you guys did, I didn't take advantage of that, but I know people that did, that were at amazing rates, 4%, 2%, and up to 2 million. And yeah, and so I know we have inflation, and I get it that both presidents contributed to it, but I really believe without it, we would have a much more decimated economy, and that it will pay back and that we will fix this. And so it was so helpful. Now, unfortunately, it was uneven. The restaurant revitalization fund and stuff was uneven, and it was hard to get for certain people. You guys did an amazing job, and I just want to say thank you on our industry's behalf.
Yeah, for me, I just want to make sure everybody knows that when Robert says no one pat your back, but actually we have a lot of resources on your back. Either from federal, state, local level, or all the community-based organizations, associations, we are on your back. We just need you to really trust us and then use all those resources and not just working in silo on your own, because that's key. When you just start small, you cannot afford a team, yet you can have a team because all the available resources here. And also, university have a great learning platform that you can utilize.
Thank you so much for all your wisdom and for being so generous. I'm going to point everyone to sba.gov. So you want to keep that and go there. And if you put in the words resource guide, there is a fantastic resource guide that gives you need some marketing help. You need something about loans. You need this type of information. It is there. It's going to point you towards the tremendous technical assistance providers within the Greater Bay Area. So that's a free guide. You can download it. You can get great information. The last thing I'll just say as we wrap up is, and someone is holding it up, so it's a QR code. We are starting our next round of our small business entrepreneurship program. It'll be starting in September. We have upwards of 400 graduates now and counting. It's a 12-week free program. As you go through the program, at the end of it, you're going to come out of it with a business plan. You're going to come out of it with a successful pitch that you'll be able to present. And if you've been diligent and you've gone through everything that we put through in the program, we will match you up with a mentor for a 9-month period with the goal that you will have your business successfully launched at that time. So please take advantage of that. We've been doing that. We have great presenters that come in. In fact, several of these individuals here will be a part of a resource panel that we'll do later in the program.